Bismillahirrahmanirrahim. This is the third video on incremental analysis. In this video, we will solve an exercise on how to use incremental analysis for make or buy decision and prepare incremental analysis concerning make or buy decision. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who want to refresh their learning on using incremental analysis for make or buy decision. So let us start with solving an exercise on use of incremental analysis for make or buy decision. Now, Shop Incorporation has been manufacturing its own shades of its table lamps. The company is operating at 100% of capacity and variable manufacturing overhead is charged to production at the rate of 70% of direct labor cost. The direct materials and direct labor cost per unit to make the lamp shades are 4 and 5 respectively. Normal production is 30,000 table lamps per year. A supplier offers to make the lamp shades at a price of 12.75 per unit. If Shop Incorporation accepts the supplier's offer, all variable manufacturing cost will be eliminated, but the 45,000 of fixed manufacturing overhead currently being charged to the lampshades will have to be absorbed by other products. We are required to prepare the incremental analysis for the decision to make or buy the lampshades. So for this we are going to look into the cost involved and how it is going to impact our make decision and the buy decision. Now the direct material this is the normal production 30,000 units. So we have 30,000 times the direct material cost per unit, that is given as 4. So this is 120,000. Direct labor, we have 30,000 units again, and the direct labor is at the rate of 5. So that makes 150,000. The variable manufacturing overhead is charged to production at the rate of 70% of direct labor. So we have direct labor 150,000 and 70% of this will be the variable manufacturing cost, that makes 105,000. There is fixed manufacturing cost of 45,000. Nothing will be under the heading of purchase because we are making the product, and the total annual cost will be 420,000. If the company is going to buy the product, there will be no direct material, no direct labor, no variable manufacturing overhead. A fixed manufacturing overhead are going to be there, that is 45,000. You can see they have to be absorbed by other products. And then we have the purchase, and the purchase price is 12.75, and this is for 30,000 units as we have already talked about. So this will be 382,500, and the total annual cost will be 427,500. Now, if we are going to buy the product, our profit will increase because now there will be no direct material, there will be no direct labor, there will be no variable manufacturing cost. The fixed cost is going to be irrelevant in our case, and the reason is that it is, if you can remember, that fixed cost in this case is a sunk cost, and sunk costs are the costs that have already been incurred and will not be changed or avoided by any present or future decisions, and they are not relevant, and that's why they should be ignored. Now, when we say relevant cost, obviously those costs that are going to be impacted, but cost and revenues that do not differ across the alternatives should be ignored when we are going to choose between the alternatives. So thus fixed cost will be ignored over here, and then we have the purchase price, and this will decrease our net income by 382,500, and this is negative. So the net impact is, there will be in our net income is going to decrease by 7,500. So the company should not purchase the lampshades as indicated here. You can see that the company is going to make a loss of the profits is going to decrease by 7,500, or we can say that the cost is going to increase by 7,500. Then we go to part C. Would your answer be different in B if the productive capacity released by not making the lamps should be used to produce income of 25,000? So obviously, first of all, let us look into the total annual cost when we are making the product, that is 420,000. If we are going to buy the product, it is 427,500, and we have seen that there will be a decrease in the net income by 7,500. Now, if we can use if we can use this capacity to produce income of 25,000, so this is an opportunity cost, and the total cost will now be 445,000. To buy, obviously there will be no opportunity cost, so this is 427,500, and this 25,000 is a relevant cost to be considered. So if we now go to buy the product, there will be a cost savings of 17,500. So if they can produce income of 25,000, now the company should purchase the lampshades, as you can see that the total savings will result in 17,500. Next, let us solve one more exercise where we use incremental analysis to make or buy decision. Now, Innova uses 1000 units of the component, and the name of this component is IMC2 every month to manufacture one of its product. The unit cost incurred to manufacture the components are as follows. We have the cost over here. Overhead costs include variable material handling cost of 6.5, which are applied to products on the basis of direct material cost. The remainder of the overhead costs are applied on the basis of direct labor dollars and consist of 60% variable cost and 40% fixed cost. The vendor has offered to supply the IMC2 component at a price of 200 per unit. So should Innova purchase the component from the outside vendor if Innova's capacity remains ideal? So first of all, let us see the total cost if we are going to make the product. We have direct material, and that is 65. We have direct labor, that is 45. There is material handling of 6.5, and then the variable overhead we have to calculate. You can see although the overhead is 126.5, but this includes 6.5 of the for the material handling, and that is variable, and you can see it consists of 60% as variable cost, so this is equal to 72. So the variable overhead are 72. The purchase price is 0 in this case because we are making the product, and the total will be 188.5. If we buy, there will be no material cost, there will be no direct labor, then there will be no material handling, there will be no variable overhead, but the purchase price is there of 200, so this will decrease our net income by 200. If we buy, obviously there will be increase because there will be no direct material, no direct labor, no material handling, and no variable overhead. So you can see the net impact is if we sum up these, this is going to be negative 11.50. So should Innova purchase the component from the outside vendor? And the answer will be no. They should not purchase from outside vendor, as the per unit cost would be 11.50 more than if they have made it. Then should Innova purchase the component from the outside vendor if it can use its facilities to manufacture another product? So in that case, you see the total number of units is 1000, and there will be an additional cost of 11.5. That makes it how much? This will be 1000 times 11.5, that is 11,500. So if they can use its facility to manufacture another product, then the company should increase their contribution margin by more than 11,500 through the manufacture of the other product before it would be economical for them to purchase IMC2 from the outside vendor. Then what are the qualitative factors so that they should consider? Now the qualitative factors to be considered obviously may be the reliability of the vendor, the delivery time for the product, the quality of component, etc. So this completes the third video on incremental analysis, where we learned how to use incremental analysis for make or buy decision, and how to prepare incremental analysis concerning make or buy decision. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.